going deeper. We're going to be in a series for the next couple of days called Digging Deeper. And today we're going to talk about what the T is. Okay, so let me tell you, I have a 14-year-old daughter and she's in high school now. This is her freshman year. And I think it was last year or the year before that, she was telling me that her friend was telling her about what the T was. And I was like, what in the heck is the T? Like, and it was kind of funny because her name's Leticia and we call her T. So for a second, I thought she was talking about herself. I don't know. And so she like completely did like this eye roll thing. And she was like, Mom, the T is like when people tell like what's going on, you know? So anyways, I thought I'd be funny today and say, let's talk about what's the T. But we are actually going to talk about tax deductions. So yay! On tax day. So how appropriate is this? Today is the day when business returns for S Corps and C Corps and partnerships are due if you filed an extension in March. So today we are going to talk about what the T is. So let me bring up, because we are going to actually look at the actual tax returns, because I think that's a really good place to start when we're talking about tax deductions. Now, I get questions all the time about what's deductible and what's not deductible. And I know we talked about this on one of the other sessions that we had over this past couple weeks. And it's important to know what you can deduct, because if you don't know what to deduct or you're not sure what you can deduct, you can actually miss out on some things. And alternatively, if you deduct the wrong things and you get audited, you can actually pay penalties and interest if those things are disqualified. So it's important to know the basics about what is deductible and what's not deductible. And so that is what we're going to kind of talk about a little bit more today. So let's take a look at what those things are. As I can see where to share my screen. Okay. It's been a little bit since I've done this, so let's see here. Okay, here. Okay, so here is a Schedule C. So if you're not sure what a Schedule C is, let me explain it a little bit. A Schedule C is the tax form that gets filed along with your 1040 form. So if you are an individual who has a single member LLC, a sole prop, a freelance, a small business that you haven't turned into being taxed as an S Corp or anything like that, typically you file a Schedule C. This is the most common business tax form that there is. And so we're going to start here because it's the easiest place to start. Remember, if you have any questions, please drop them in the chat. I am kind of monitoring those, but I will take a look before we end the call. So if you do have any questions, we can take a look at that. But this is the Schedule C form. So most of this information will get automatically populated with your tax preparer. You have the option of filing on a cash basis or an accrual basis. And now the biggest difference between these two bases is when you consider a transaction to take place. So what I mean by that is when you file on a cash basis, you take in or accept the transactions when they're actually paid, when that money leaves your bank account. So if I get a deposit, I put it into the deposit, I automatically say that's sales, right? That's the sales money coming in, it hits my account. When I pay something, it's an expense, it leaves my account, it gets accounted for at that moment. On an accrual basis, it gets accrued or counted when the transaction happens, when it occurs. So what I mean by that is if you invoice your customer and they don't pay you for 30 days, so it rolls over into the next month or something like that, you still account for that sale when you make that invoice, not when you get paid for it. Same thing when you pay bills. When you get a bill, for like a contractor or something, or even We Energies, you get a bill, but it's not due and you don't pay it until it's due. But you get that bill like 30 days ahead of time, right? So you expense it when you get that bill, not when you actually pay it. So that's the difference. Cash is when you actually pay it, leaves your account Accrual is when you get billed for it or you invoice for it, but not necessarily when the money hits your account. And so that's where you can end up with P&L, profit and loss statements that show that you made a lot of money because you had all this revenue coming in, but you didn't actually have it coming into your bank account, and then you have a cash flow issue. So that's kind of where those two things intersect. And so that's where you have to indicate this. Now you can change how you do it, but it's a little bit tricky to do that. So typically, whatever method you choose when you first start is what you usually continue to use throughout the time of your business, unless there's some kind of tax strategy that would be involved, but that kind of gets into a little bit more complicated and should definitely be a conversation you have with your accountant before you make that decision. So that is where you kind of indicate that, though. And that we have gross receipts, which is going to be where you put all your income that comes in. If you have returns or allowances, that's where this could come out. Cost of goods sold, we went over this one. We went over the P&L and balance sheet, the financial statement. So if you're not sure what that is, go back to that video and watch that one. Cost of goods sold gets marked here, and then your gross profit. And then we come down here to your expenses, which is, these are the basic ones that you want to have. So we have advertising, car, truck expenses, and now you can do car and truck expenses on two different bases when it comes to your taxes. You can either do mileage deduction, or you can do actual expenses. Again, with this, whatever method you choose for whatever vehicle you're using, you're supposed to continue to use that during the duration. So if you choose mileage when you first start, you need to keep using mileage because you can't do both. You got to choose one or the other. You can take the depreciation. If you depreciate, you have to do actual expenses. So just something to kind of keep in mind that once you do that, you have to do actual expenses. So if you depreciate your vehicle, you can do actual. But let's say you're using your own family vehicle that you've had for, several years, and you're going to be using that. Mileage is probably going to be your best deduction. So make sure you're keeping a mileage log to account for those expenses. Now, the IRS does allow you to use your calendar in accordance with your mileage log. So you don't need to have all those details written out on your mileage log. You can use it with your calendar so that those things go together, correlate. But you want to make sure that you have that documented, or where you went, who you went, and all of that kind of thing. Of course, this year there's probably going to be less of that because most people have been doing things at home and doing on Zoom. But just so you know, mileage is typically the deduction that you would want to be able to keep for your taxes. Commissions and fees, if you're paying that, contract labor. So this would be for 1099 vendors. So if you have a contractor that does work for you in the U.S. and you need to issue a 1099 for them, this is where that information would go here. We'll talk more about contractor versus employee at a later date. Depletion is kind of along the lines of depreciation. It's when you have something, an asset value, and you take a portion of it each period. This is typically something that's automatically populated as well. If you offer benefit programs to your employees, that's a deductible expense. So if you didn't know that, that's something. Insurance, this would be insurance that's not health. It does say that here, other than health. So that would be workman's comp insurance, general liability insurance, car insurance, those kind of things go put in here. Interest, you have to look back at the instructions, but typically if you're paying interest on a loan or something like that, that would be something you would be able to go here, or your mortgage here. So that actually drops down to 16A and 16B. Legal and professional services. So now this is something that people get a little bit confused with. Typically, legal or professional services would be something that you're paying an actual qualified professional for. So most often it would be for a lawyer, an accountant. Sometimes consulting fees go in there, although I have heard to split them out separately. I think it's a certified coach, then you should put it in legal and professional. If not, then probably separate it out. But those would be something that you can do. And now this is a good deduction to have because professional and personal development is something that is co-beneficial. So like if you're personally developing yourself, it's also going to help professionally develop yourself. So within reason and with, a relevant argument to how it affects your business in a good way, you can deduct even personal coaching on that kind of expense. Then we have office expense, which was, office supplies is most often within here. Sometimes also software can get put into this bucket. Rent or lease. So if you have, you're renting vehicles, machinery, equipment goes in here. Other business property would be like if you're renting an actual physical location, that's where this one goes. Repairs and maintenance goes for either vehicle repair and maintenance or equipment repair and maintenance or even building repair and maintenance. You can put that in there. Unless it's a big improvement, then you might want to do a leasehold improvement to the space that you're renting, and then that would be something that you could depreciate. Supplies. So like this is kind of this one here is where people kind of get a little bit confused as to whether they're supposed to put office supplies in there or if they're supposed to put some other kind of supplies in there. Honestly, you can do either. Like if you wanted to use office expense in there or office supplies in there versus using the office expense, or if you create something and you want to have supplies in there, or if you have a workshop, and you have shop supplies that can go in there. The biggest thing is that you want to just be consistent. You have your business; it should be fairly consistent as you continue to grow. So just be consistent with whatever you're putting in there. Taxes and licenses. So this would not be taxes that you pay on previous returns. So that's one thing people get really confused about. If you owe, let's say you owe, $5,000 in income taxes. So you filed your Schedule C for 2019 from last year, and you owe this $5,000, and you pay that money out of your business account because you can certainly do that. That's one of the benefits of being an owner, right? Is using your business to pay for some of those expenses like taxes on the business. So if you use that to pay taxes, that is not again then deductible. You can't deduct that again. So that is not what it means by taxes. What this one means is like if you pay payroll taxes, that can go in there. If you pay property taxes, that can go in there. But income taxes is not something that can go in there. So just keep that in mind. Travels and meals. So this one too can get a little bit tricky where they're looking deductible meals when you travel. So if you're traveling typically somewhere where it's further than, I think they usually say like 2 hours or 3 hours, from your home. If it's more than that, then you can deduct travel meals because you're traveling somewhere where you might not be able to get back to your home in a way, or maybe not easily accessible to get a meal, so then you would be able to do that. Then we have utilities. Wages would be employment costs, and then other expenses. So other expenses is kind of like the wide open door at the end where you can put pretty much all the other stuff. So that gets reported down here under other expenses, and then the total gets moved up to that top part. So other expenses, and this is kind of the one that I really wanted to highlight because this is going to be the most important thing. When you have other expenses, and when it comes to business and business deductions, the biggest thing that you want to remember is that you can only and should only deduct expenses that you use on your business that are ordinary and necessary. And so what I mean by that, ordinary and necessary expenses for your business. If you are a lawyer, getting a pedicure is probably not an ordinary or necessary expense for your business. However, if you're a yoga instructor where you're barefoot all day, having a pedicure is probably an ordinary and necessary expense for your business. At least it could be argued that, right? Within reason. So if you get a pedicure, every 3 weeks or once a month, whatever it may be, that's probably something that's within reason so that you can continue to keep up your appearance. Same thing if you are, a hand model, right? Let's get hand model. If I get a manicure on a regular basis, that makes sense because that's part of that job, that's part of that income. But you want to just kind of keep those kind of things in mind. It has to be ordinary and necessary to your business in order to be deductible. But pretty much anything that you use for your business in order to create the goods and services, in order to make those available, for those goods and services, is deductible. So I just wanted to kind of stress that because that's going to be the biggest thing. If you were to get audited, the burden of proof isn't on the IRS to make sure that your deductions are deductible. It's on you. They can call into any question, any expense into question that they want. It's on you to make sure that it's reasonable and ordinary for your business in order to do that. Now, people have made many very substantial arguments about things you wouldn't really consider to be an ordinary or necessary expense, but they got away with showing it. One example that I heard on a call I was on, or on a class that I was in, was a yacht. So this realtor sold high-end properties, and she bought a yacht and she put it on her taxes to get deducted. And the IRS really called it into question, but she was like, look, I sell high end houses, and they want to see these properties from the body of water that they're on. And so she got a yacht so that she would be able to show these pieces of property from an angle that would be attractive to the buyers. And she actually won that argument with the IRS. They're like, oh, okay, that makes sense, but if somebody else were to do that and put it on their taxes, they probably wouldn't go for it as much. So that's one thing you just want to keep in mind as you're figuring out what you should deduct and which you shouldn't deduct, which if it's for your business, typically you would be able to deduct it. But if it's something that is a little bit in that gray area, or, is a little bit, you're unsure about whether it should be deductible or not, make sure you just have a really good argument or a reasonable argument as to why your business needs it. And so that is basically the thing that I wanted to kind of get into. We were digging deeper today, figuring out what's the T as in tax deductions, and hopefully this was really helpful for you. If you do have any questions on this content, or if you have a different question as to if there was something you had in mind about what was deductible or not, please feel free to drop those in the comments or DM me. That's fine as well. And I am more than happy to help you. Don't forget about our contest as well. We are running the contest for the Business Boost. Invite 2 people to our group and you can get a chance to win Uncloned Marketing book. And Uncloned Marketing is a wonderful book written by one of my clients, Audrea Richmond, and it is packed filled with information for how you can market your business uncloned. And what that means is standing out from the crowd, right? Because we have so many products that are similar to others, it's important for us to really up our marketing game, especially in this day and age. So you get a copy of that. You get a 1-hour session with me to ask whatever questions you want, or to go over your reports or your QuickBooks, however you want to use that time. You can use your time. You have an hour of it. And you get a $50 gift card to either Office Depot, Vistaprint. What's the other one? Anyways, I have it on there. There was one other place. Something relevant so that you can purchase something that's going to be helpful to your business. If you have a vendor like a graphic designer or something and you want to use it for that instead, we can do that as well. So you get a $50 gift card, an hour with me, and a book on marketing for free. It's a $200+ value. So please invite people who could really be using this information, or who have business that they're launching. The more people we get in here, the more valuable it will be, and the more content. And I would so appreciate your support as well. Hopefully this was helpful, and I look forward to talking with you again soon. Thanks. Have a great day.